Following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, 9:06 a.m. We got 24 minutes to go until the start of trading, and we got markets in green territory across the board right now. You're looking at the S&Ps up by 12 points, approaching 4,700, trading at 46.98. You got the NASDAQ 100. We got NVIDIA rocketing higher on their earnings last night. NASDAQ 100 up 86 points, approaching 16,400. We're at 16,398. You got the Dow up 25 points, trading at 35,894. Dow, a little bit of an acceleration yesterday, finished down about 200 points yesterday, and the Russell right now positive by 9, trading at 2383. We jump over to Bitcoin, back under 60,000 right now. You got Bitcoin trading at 59,200. You got crude continuing a little bit of a slide in crude. We make it to a low of a 76 handle overnight. Now, interesting, I say overnight, we're talking about 2:45 a.m. I bring this up, we're going to talk about crude for a moment. 76.35 is the 382 I have on here. We make it within 9 pennies of that price point. Keeping in mind, folks, I was talking to our man Teddy Kegstadt yesterday. We talk to him every Wednesday at 40 past the hour from forex-trading-unlock.com. And one of the things I was saying, and you see the bar that we had yesterday, is in the context of where we've been in crude, we're not even back to the 382 of the move that we started on basically late August. So we're talking about in less than 3 months, you have crude go from about $61 and change up to $85 and change. We've now backed off right to the 382, bringing it down to about $76 and change. It'll be interesting to see if this level holds. This level also correlating to a period of about a week or two where you see first it was an area of a little bit of resistance, then it turned into a little bit of an area of support. You take off from there up to $85. Crude bouncing a bit right at that 382 line. We'll see if it holds today. Crude trading right now flat on the session technically, but you're in the 77 category. Haven't seen $77. You back things up. We're really talking about almost 6 weeks in terms of where we're back to on those crude prices. All right, gold contract this morning down a bit, off $6. There's your daily. We've had quite a pop in gold. You get the highs back in June of 1900. We put it on a short-term time frame. A little bit of volatility this morning in that gold contract. Gold trading at 1863. We jumped to notes and bonds on the day that we could potentially see a new Fed chair, or at least a Fed decision. Early in the week, it was thrown out there in the next 4 days. Seemed like it lined up for Friday. Maybe they push it out Friday after the close. You know the market's going to react if you get a new Fed chair. Market probably going to react in some manner, even if you get the same Fed chair with Chairman Powell, because there's been a little bit of a question mark whether he will retain the chairmanship of the Fed. That's the type of news you might want to put out after market hours to have a chance to digest, as opposed to throwing that out middle of the day and having the markets have at it. We'll see if that news comes out today. I expect we're going to get it before Monday's action as well. We'll see. Lael Brainerd, she might be coming in as the chairwoman to lead the Fed. If that happens, you'll see an automatic reaction in these markets. Be interesting to see in terms of if that happens over the weekend, how that affects rates, how that affects yields, how that affects growth stocks in the market in general. We're going to find out by Monday, one way or the other, between Mr. Powell and Miss Brainerd. All right, jumping around to what else we got going on. We got jobless claims this morning. Little unchanged. We're talking about a decent number this morning, 268,000. Market was looking for 260. And you get into it, and you're talking about still a decrease. We were at 269 last week. We're at 268 this week. The trend is your friend. Lower numbers we're approaching, and we're almost at basically the normal churn of a healthy economy. 250,000 jobs on a weekly basis, healthy churn. Most of the time, we're not dealing with the normal market, though. You could make the case that with everything going on, with the amount of jobs that we need to make up, that number could approach 100 to 200,000 numbers as we ratchet it up, but not quite the case. But nonetheless, pretty decent number. 268,000 comes in for the weekly jobless claims number. All right, what else we got going on? Let's jump to two of the retailers. I talked about Kohl's, and yeah, Kohl's is getting it done somehow. I had my own anecdotal story earlier in the week, right? Shopping for some kids' toys out there, shopping for like one of those play sets, a play kitchen, right? One of those types of deals. And Kohl's was beating Amazon and Walmart on price, which was remarkable in my opinion. And yeah, you're seeing it, and I guess they're doing something right over there in Kohl's. Retailer reports 16% sales increase. Shoppers buy clothes and makeup. What happened to toys? Either way. They're trying to draw customers to the stores and website by expanding the assortment of casual clothing, and teaming up with Sephora is one of the things they got going on. We'll talk to our man Kevin Hincks after the break. He said rightfully so. They got to experiment some way to compete with the big dogs out there, Amazon, Walmart, Target, the likes. They raised the forecast for the full year, better than expected performance. Shares are up almost 10%. We'll jump over to that in a moment. Earnings, $1.65 versus 64, and revenue. It's a huge beat percentage-wise, right? You're looking to take in under $4.3 billion. You take in $4.6. Folks, that's an additional $330 million that they took in 90 days. I mean, that's almost $4 million every single day in extra revenue that this company took in. And percentage-wise, what are you talking about? You're talking about an 8% pop than the expected number on revenue. A lot of that going to the earnings side of it as well, as they beat by over a full dollar. Net income rose to $243 million. They had a net loss a year earlier. Things were very tough a year earlier, obviously. Revenue climbed to 4.6 from about 4. The market was looking for about 4.3. Same-store sales, 14.7%. Market was looking for 12.5. Big numbers there in a big way. They expect to earn between $7 and $7.30, $7.10 and $7.30 a share. Kohl's was looking for $5.80 to $6.10. Big beats across the board. And as they talk about that in terms of Kohl's had a recent clash with activist investors in there. They had a lot going on. They bought back $506 million worth of shares in the third quarter and plan to repurchase a total of $1.3 billion worth of shares in 2021. That's a stock repurchase program for you. KSS is their symbol, and you're going to see that pop up to $62. You traded lower yesterday. I think they just started their earnings call when I came on the air. Looks like that's going okay as well, as we're pushing the pre-market highs on Kohl's. We take a look at the daily. Now, you're not going to see the action this morning on this daily. Remember, we're going to open at about $62 right now. And you're going to be pushing right up against these highs that we had, where there was the high back in March of 64.16. You had the high in April of 63.72. And then you had the high recently in May of 64.80. We're going to open at 62.20 and change as you look to open positive in a big way for Kohl's and Macy's, with some strong numbers as well. Now, Macy's has been quite a rocket ship, and it's going to continue rocketing today. They got a bid-ask above 35, so that's a solid 11-12% pop on Macy's shares. You take a look at the 15-minute, there's your acceleration on Macy's. You jump over to Macy's. Department store beats on earnings, hikes the full-year outlook thanks to new customers. Added 4.4 million new customers in the quarter and benefited from an improved economic environment, raised the expectations. You get into the numbers, big beats just like Kohl's. They beat almost by $1 on earnings. Revenue, they beat by about $200 million from 5.2 to 5.4. They raised the forecast. Net income of $239 million. Big numbers. Digital sales growing at 19% year over year, up 49% on a 2-year basis. Macy's, Kohl's trading higher. Stay tuned, folks. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
All right, welcome back, folks. We got the S&P's up 13 points. We got about 12 minutes to go until the market open. And let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time. Kevin Hincks, Tom White, the team at TD Ameritrade Network on Fast Market, breaking down the day's market action, setting up hypothetical trade setups. We're in earnings season. We got a lot going on, and we may even get a Fed decision, whether it's today, tomorrow, over the weekend. Kevin Hincks, we got a lot going on, man. Good morning.
Good morning, Tommy O'Brien. Yeah, it's earnings season. Not a lot of economic data coming out today or tomorrow, but yeah, there's certainly a lot of things that could make this market either happy or unhappy, Tommy.
Really interesting, Kevin. I was speculating a little bit at the kickoff of the program. I think they started talking about putting an actual number of the days. I think Biden said, well, you'll have an answer in 4 days or something. That was Monday. That correlated to Friday. I said maybe it's 4:05 p.m. Eastern time on Friday. We get that news so the weekend digest it as opposed to in the middle of the market. But you never know when that might come out. The news could break. Always kind of interesting, hanging over the head of everything else going on. Some strong earnings from the retail sector. Again, Kevin, last night we talked a little bit about Kohl's, Macy's, just big numbers, both of them trading higher this morning. What's your take on that action?
Yeah, listen, I think, you got Kohl's up $6. You've got Macy's up $4, which is actually a bigger percentage move. So these are good numbers. I mean, the recovery in the retail sector, Macy's Tommy got down to $4 at one time. Amazing. And now this stock they're starting to talk about unleashing more value in this company. So, who'd have thought that we'd be looking at Kohl's and Macy's leading the market as we open up the day. But NVIDIA has great numbers too. That's good. Cisco suffering with some supply chain issues. They have their own little problems, but all in all, a market that is slightly higher. The Nasdaq leading, not surprising, with NVIDIA probably up $25 to $30 on the open. So a good, strong day, a little recovery in the Russell. That's not the worst thing in the world. And so, with crude, look at there's a lot of interesting things on the board to look at. Crude oil now back to $78. It was just below $78 a few minutes ago, just rallied slightly. But kind of some interesting turns here that we have going on, Tommy.
Yeah, I mean, if when we talked on Tuesday, Kevin, we were at $82 with the handle, almost 81 handle on crude on Tuesday, and we just had a 76 handle this morning. So definitely some volatility. We'll see though as we speak, as you're talking about. We now are $1.50 off the lows already from overnight. Interesting, you talk about Macy's, even how low it got, man. We are now, Kevin, and I know you know this stuff, but pulling up the chart, I got a 3-year weekly of Macy's. You came into the pandemic, man, in the early 2020 in the high teens, and we're going to open at double that, Kevin. I mean, if you had said, right, these stocks, whether it's Macy's, Kohl's, now above pre-pandemic prices, early 2020, they were in a max pain situation. But it is interesting in terms of just the ability to adapt, right, push things onto online, just hang tough with the times. They've really done a tremendous job. Not a lot of people would have said, Macy's, you come into the pandemic and you'll be at 100% of what we were at prior to those levels. Pretty cool how some of these retailers almost capitalizing on a tough situation. There's been winners and losers, as we know, man, and some of these retailers, Macy's, Kohl's, big time. So where else do you go, Kevin? We talked about the Fed, right? We got the rates kind of sitting pretty calm action so far today. The 10-year right now is like moving 1 tick. The 30-year right now is moving 5 ticks. Do you look for any type of action? And of course, action. But what do you look for in those rates as we expect a decision, whether we go to Powell or potentially the possibility that there's a change at the top of the Federal Reserve?
Yeah, I think what a change will show something. And a change at the top of the Federal Reserve right now would show really only one thing, that the Fed chair is now a political entity, right? Because there's absolutely no performance reason to change from Jerome Powell. The only reason to change that would be political. And so I'll go on Rex again. I've said it before. Jerome Powell has been the most effective Fed chair in my professional career, the most transparent. He's guided us perfectly through this. And now, right before he's about to finish the job, if he were to be removed, I think the markets would find that unnerving, Tommy.
Yeah, pretty interesting. We're sitting at a yield in the 10-year, 1.6% right now. The Fed started tapering at the last meeting, and the market just takes it in stride, man. Really interesting just from a market perspective, trying to digest where the action goes. Because it seems like, Kevin, no matter what happens in this market, man, that it just takes it, it runs with it, the earnings deliver, and we see higher prices, man. We get the S&Ps this morning, we're 14 points away from all-time highs in the S&P at 46.97. Well, with that in mind, Kevin, I know we've kind of crushed the earnings this week, but what are you guys going to be chatting about coming up on the show today, Fast Market at 12?
We're going to trade Workday, the online HR management company. Then we're going to trade Foot Locker, a great proxy for Nike, coming up soon. They'll have earnings out before the open tomorrow morning. And then finally, we'll trade some cybersecurity in Palo Alto Networks, Tommy.
Nice. Yeah. Just when I think, some of the big names are out on earnings, still some pretty interesting companies, man. Workday, quite the chart that Workday's got going on. Pre-pandemic, you were at 200. You're at 300 right now. You were just trading in August at 226. And Foot Locker, not quite back up to the highs we had earlier in the year at $66. We're trading right now at about $56. And Nike, how about Nike, Kevin, right? They were going to have some problems, it looks like, for the longest time in terms of the pullback from August at 172. We make it down to 144. And then this thing just takes off, man. Post earnings, their last season, strong company. Nike pushing 171. Kevin, man, we appreciate the conversation and the education as always. And the next time we talk to you, we're going to have probably a Fed decision one way or the other, man. And interesting markets, to say the least. We look forward to it, and we look forward to the show at 12 as always, man.
Thanks for having me on, Tommy. Have a great day as always.
You too, Kevin. Take care. Folks, tune in. You heard it. They're going to be talking Workday. They're going to be talking Foot Locker. They're going to be talking Palo Alto Networks. You got to love earnings season. They walk you through the hypothetical trade setups, talking about defined risk in this options market. Check it out. Kevin Hincks, Tom White, 12 noon Eastern time today. All right, jumping back to the markets. We got less than 5 minutes to go until the open right now. We got the S&Ps sitting pretty right now, just kind of hanging out. Look at this trading range, right? Since about 4 a.m. Eastern time, you're talking about a 5-point range in the S&Ps sitting up here. We're near the bottom bottom of that range, but basically where we've been since about 7:30 in the morning. And think about it. We just got weekly jobless claims numbers out, right? You're digesting earnings still going on, and you got the S&P with a pretty tight range right now. We jump over to the VIX volatility index. Little bit of an elevated level yesterday. You did have a little bit of a sell-off in those markets today, trading at 1687. The story, now this is yesterday's news, Visa, but I wanted to talk a little bit more about it, man, because it is interesting. One of my best friends is in the credit card processing business. They have a processor, and they do big business. They're processing like $1 billion plus a month. And I'm always kind of poking them a little bit of the end of credit cards, which is not going to happen, folks. But boy, this news, probably not the news that they want to hear. And they got a strong company. I'm just kidding in a big way. But man, Amazon, they got some weight to throw around, man. And they threw it around in a big way in terms of saying that they are no longer going to be accepting UK visas. We're going to talk a little bit more about that when we get back, because they're playing hardball over there in a big way, and we'll see how that plays out. Amazon down Visa, down yesterday. We'll be right back for the open, folks. Stay tuned.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we got markets open. We get the S&P pulling back a little bit, a few points on that open right now. We're still positive by 9 on the session. You get the NASDAQ positive by 75. Dow giving it back. We're flat right now on the Dow at, 35,862, and the Russell actually catching a bid up 11 points. Let's jump over some of the stocks that are moving right now on earnings, seeing how they're holding up on the open. Macy's up 13% on the open. Kohl shares up 10% right now on the open. NVIDIA shares up 10% right now on the open. Man, it is remarkable. Now, on the flip side, Cisco trading lower. Cisco down 6.8% on their numbers right now as of the open. What else we got going on? Seeing what else we have moving. That was a lot of them. Sonos was out with their numbers as well. I think they were trading a little bit higher. Holding on to those gains, you got Sonos up 2.4%. And getting back to Visa real quick. So Visa catching a bid. They're buying the dip. Visa up 1.2% right now after the slide you had yesterday. And it was quite a slide, folks. You were down like 7% from a price point about $215 to $200 at one point, giving up $15. That was like a 7.5% move at the lows. We close out the day at about $206 on Visa, so cutting some of those losses. Now, getting back to the article, and I was just chatting with my good friend even during the break, and he's talking about, this has a lot to do with Brexit, as the article states over here in Bloomberg. There's a couple points I wanted to point out in terms of really, with the power play, as he put it. So, their company, my friends, not that it matters, but they're only in the U.S., so not very interested in this going on. But this has a lot to do with Brexit, because what happens here is, let me get the quote that they sum up here. Yeah, so the issue is increasingly sensitive one in the UK. Okay, retailers have long complained about the amount of money they spend each year to accept electronic payments. It's a big number, folks. I mean, we pay some big numbers in terms of percentages and fees when you think about even the business we do, taking money online. A figure that's grown to more than $100 billion a year in the U.S. as fees increase and consumers flock to premium cards, which carry higher interest rates, fees charged every time a consumer uses the card. It's become increasingly sensitive in the UK. Both Visa and MasterCard drawing scrutiny for upping certain fees now that the UK is outside of the European Union. Credit and debit card costs have increased £150 million a year, with both the UK and European retailers losing out. The departure from the EU removed caps on transactions between the UK and the European Economic Area, allowing card firms to increase cross-border payment fees. There's the key. Okay, so they jack that up. They have the ability to. They're not limited by the caps in place between the UK and the European Economic Area. Card payments accounted for over 4/5 of the UK retail spending in 2020, with just two firms facilitating 98% of these payments. Those are big numbers out there. Ultimately, it will be the consumers who suffer higher prices unless these spiraling costs can be brought to heel. So there's the case there. It will be interesting. I'm sure it will play out. But you look at what they have going on in terms of Amazon. They are playing hardball, because they're over there offering £20 if you just set up a Visa debit card, or so you can still use a Visa debit card, you can use a MasterCard, you can use an Amex. You can also just use a Visa credit card issued outside of the UK. If you do that and you set it up, Amazon's the best at making sure they set you up. They get your credit card in there, so you just click a few buttons. If you set that credit card up in for your next purchase in Amazon, so then they'll have it, so that you just got to click that button for the next purchase. They'll give you £20. They'll give you $27 off your next purchase. You think about that. That is some real cash. Nobody else is giving you $27 just to change your credit card on their platform. But it's worth it to them for probably what they're paying. And they will be playing some hardball. Now, what my friend also told me, just interesting to keep in mind there, is that he said what's going to be interesting is to see what happens in April, okay? Because Visa and MasterCard, and I believe he's talking about domestically now, have delayed some changes 2 years because of COVID. He's talking about changes to some of the fees, okay? They've changed, delayed them for 2 years. Didn't want to be seen as price gouging or hacking things up, hiking, I should say, the prices up during a period of economic turmoil. So they delayed those 2 years, okay? They may be coming in April. And his quote, and I'll give it to you, should give decent revenue boost middle of 2022 if they don't back off again. It'll be interesting to see what happens. I imagine in April we'll be pretty good to go. I don't think the credit card companies are going to have to worry about catching too much heat in terms of crushing small businesses, etc. By April, we should be back to a more normal world. We almost already are in the U.S. So that's something to keep in mind. And guess what? Visa looks like they're buying the dip a little bit today. They bought it yesterday when you got down to 200. You're at 206. You take a look at this thing on a longer-term time frame. I mean, you really want to see an acceleration, folks? Put Visa on a monthly. You go back to $10 in 2009 to $250 earlier this year. Now, yes, you have had quite a pullback, but you put this thing on a monthly. That is quite a pullback, all right, because it's crazy that you give it all back in terms of you are back to the beginning of 2020 prices. But long-term, credit cards are here to stay. Visa will be fine. Maybe they'll have to trim some of those margins a little bit, but that having to do with more so a Brexit deal where they really jacked them up because they had the opportunity to. And Amazon's probably saying, hey, we're not just going to siphon off money of our business to the tune of hundreds of millions of dollars. And yeah, as he put it, it would be the biggest rate increase for Visa in a long time if they decide to go up on those rates in April, and they've been delaying that for 2 years. So keep that on your radar if you're looking for Visa, potentially getting a boost there in fees in April if they decide to go forward. They've paused that for 2 years now on Visa, but probably expect it to happen, and I'm just guessing myself. But I mean, think where we were last April, right? Just coming out of COVID. I think I got my COVID shot, my first vaccine, March or April, when I was on the early side, even in Florida as a 40-year-old at that time. So not quite the same world we're in now, where everybody is vaccinated that has the opportunity or wants the opportunity, I should say. I imagine they'll have enough cover to jack those up in April, especially if they've been delaying them for 2 years now on Visa. All right, let's jump over to NVIDIA. Speaking of stocks trading higher, there's a monthly chart for you. NVIDIA shares, you were down in the 33s in the better part of 2019, folks. You're trading at 321. You're up 10%. You jump over to the Analyze tab. NVIDIA, you're talking about a company now valued at $804 billion. It's huge money, man. It's amazing the run this thing has had. We put it back on a daily for the last year. You were just trading at 200. And I was talking about this yesterday, saying if you bought this thing on margin in October, up 50% margin, you just more than doubled your money, which is amazing on this stock in a period of 6 weeks. And that's after the run it has had. But NVIDIA up more than 10%. And on the flip side of that, Cisco down almost 8% right now. Cisco gives back all the gains it's had since March, trading back to about $51. Let's check in on Macy's and Kohl's as they continue higher. Macy's holding on to those gains, up about 10%. Kohl's giving it back a little bit, only up 5% now. It's always interesting to check on these stocks and see how they actually open as opposed to the pre-market action. Kohl's gives it back a little bit. Macy's holds on to it. Now, Kohl's, again, all things considered, quite a run. You were just trading at $45 just over a month ago, so you're still up 33% almost coming into this earnings season from that acceleration. But you do give it back, and you give it back to basically we're just at where we were trading earlier in the week on Kohl's. That's got to be a little frustrating. I went over to the numbers at the top. They beat huge. Revenue, earnings, all the likes of that. And they're up 4% today. Stay tuned, folks. We'll come right back, see what else we have moving on Thursday action. We'll be right back, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. We got the S&Ps right now up by 7, folks. We jump over to commodities. Crude hanging right at about $78. I went over this early in the program. We got crude bouncing right off the 382, which is interesting. You take a look at the daily. Crude accelerates from a price of about 62 up to 85. Crude is trading at $78, and we bounced literally within about 9 pennies of that 382. Keep your eye on crude. We got a price point about 76.35 is that 382. Maybe we'll come back down and test that area yet again. We will see. Gold contract this morning down about $4, but you see the run gold has had recently. You back things up to just November 3rd. Gold was trading at 17. Let me get the low. 17.58. We're trading up $106 from there. 18.66 in the price of gold. All right, jumping around to what else we have going on. Where are we? There we go. We talked about a lot of these stocks, but we jumped down them. We talked about Macy's. We talked about Kohl's. We have BJ's out with their numbers. Beat estimates by 11 cents. 91 cents a share is what they make. Revenue and comp store sales also top forecast. A new stock buyback program worth up to $500 million. BJ is their symbol. And there's a pop for you. Up 14%. These big box retailers, man, look at the run that BJ's has had, right? You come into 2020 at $20, and you're pushing $70 right now for BJ's. Remarkable. Let's take a look at Costco. How's Costco trading? Yeah, pretty similar action. Costco pushing on a weekly basis, just higher across the board to $5.25. The run continues. Amazing. Petco out with their numbers. Beat estimates by 2 cents a share. Quarterly earnings of 20 cents. Revenue above estimates. Comp store sales better than expected. Raised the full year forecast. I mean, I'm just going to get a recording going, folks, of these earnings. What's their symbol? Excuse me. Woof. Woof. I should know that one. Oh, what's going on? You're down 10%. What happened? Not quite the story that you were thinking when you got those numbers, right? Man, not the story at all. What they got going on here. Maybe we'll have to figure it out. They raised the earnings outlook. There's more going on than that. Yeah, beats earnings. All the headlines are pretty kind, but guess what? There's more of those earnings than that because you got Petco trading down 10%. We take a look at this thing. Not quite the same as some of the charts we were looking at. You're up to $31 early this year. This morning, you're down to 22. We got lows for the year. And what did they like? Bring this just back IPO or something like that? Because my chart only goes back to the beginning of this year. You got Petco down 8% on their numbers. Yeah, Alibaba is lower as well. Top and bottom line misses in the latest quarterly report. Yeah, so let's check this one out, man. Be careful of these China stocks, folks. Down another 10%. You just traded from 180 less than a month ago to 145. Talk about getting sucked into this equity. I imagine we'll make it down to potentially these lows of 138. You take a look at Alibaba, and you're talking about a max pain situation, folks. Whether we get to this situation in terms of the lows we had in October, you got a low back here towards the end of 2018 at 129. Let's back it up even further than that. And yeah, we're coming down to some pretty critical areas because you don't hold at 125 to 145, basically 150. I mean, you're on your way lower. Let's put this on a monthly. Yeah, you're on your way lower to at least about $100 would be the next stop. You see, we make it below these levels that we had in early 2019, late 2018. Amazing. You're talking about more than cut in half. You had Alibaba on margin about a year ago, and you got a complete wipeout. Complete wipeout. Amazing. Now, they are not the only ones. I think I was checking out Baidu this morning. Yeah, Baidu's down 3.6%, probably on the heels of Alibaba. And Baidu, similar action. You got more than cut in half if you're trading margin on these stocks. I mean, look, if you were trading margin on this stock anytime from February 10th to March 4th, you got a complete wipeout, essentially, from 300 to 156 on this stock. And I imagine that the max pain's not over, folks. The landscape has changed in China. President Xi is running that country probably until he dies. And he is not concerned with the yearly profits of companies like Baidu or Alibaba. He is concerned with maintaining control of that country for the better part of decades to come. Keep that in mind as you think about entering these. And yeah, you can trade them because, man, you got to love some volatility. But in terms of investing in them, you just got to realize that you're investing in companies that have variables in play that are very difficult to quantify. In terms of trying to quantify the variability of a profit that's going to come from a company like Baidu or Alibaba when you have an influence of a dictator running the country. If you can quantify that variable better than anyone else, you might be able to make money. I don't know how you do it, though, because there's really no way to tell what's going to happen over there unless you have some kind of inside track into the Communist Party in China, which I'm guessing most of us don't. All right, jumping down the line, see what else we have. We talked about Cisco trading lower. Forecasting current quarter revenue below forecast. Networking equipment companies seeing supply chain and other issues driving up costs. Better than expected earnings for the most recent, but revenue slightly short of Wall Street forecasts. We talked about NVIDIA beating. We talked about Sonos. They were higher as well. Quarterly loss of 7 cents a share, but the maker of wireless home audio equipment saw revenue slightly below analyst projections. However, they also issued a better than expected sales forecast for next year, even in the face of supply constraints. That's what it's all about, folks. Market very rarely cares what you did 90 days ago if you're going to tell them that you're going to exceed expectations going forward. And yeah, how about Bath & Body Works and Victoria's Secret? Now, Victoria's Secret, I had a small position in Victoria's Secret, Bath & Body Works, going back to before they even broke up. It's been one of the best performers over the last 2 years, remarkably. Now, this stock only goes back, the chart, to August, which is when they split off those two companies, okay? But you got Victoria's Secret today up 13%. They were up 11% pre-market. They beat estimates by 10 cents a share, first quarterly report, as they've been a standalone company after they split up. Yeah, it was L Brands, and they split up to Victoria's Secret and Bath & Body Works. You got both of them trading higher, both of them pretty strong equities. BBWI is now the Bath & Body Works. Look at that pop. You're going to be pushing all-time highs, and there is the break-off when you had the break-off of Victoria's Secret, and they've clawed it all back. So they spin off Victoria's Secret. The share price goes from 82 to 65 on that spin-off, and you get it all back over the period of 3.5 months on Bath & Body Works. You're up 7% on Bath & Body Works, and you're up an additional 13.4% on Victoria's Secret. Now, the market loved this when they pushed that standalone company off originally, but man, talk about waning over the last 3 months. Nonetheless, first time they're reporting earnings. I believe Nat said that, but I guess maybe they had earnings back in August it's talking about. Not sure. But nonetheless, higher prices for Victoria's Secret if you want to see. So check out Bath & Body Works, right? You check this out. You go back a 3-year weekly to see the full COVID accelerations in here. Now, this thing traded down to $8. If you recall, they were up to 25 prior to COVID. They were going to spin off Victoria's Secret already. That deal fell apart when the pandemic hit. The stock goes to $8. Turned out to be one of the best things that could have happened because they got a much better deal in terms of spinning that thing off. You got the two companies now. You have Bath & Body Works trading dramatically higher in terms of from 25 to 80. And in the same time, if you jump over to the Analyze tab in terms of the valuations for these companies, you're talking about Bath & Body Works. Oh, come on, calculate. There we go. A $21 billion company at these prices. And Victoria's Secret, pushing smaller number, but $5 billion market cap for these companies. Added up, the two of them, you're talking about $26 billion market cap for the two of those companies. Victoria's Secret, Bath & Body Works both beating. Victoria's Secret got some volatility in a big way, up almost 14%. All right, folks, we got tech stocks trading higher. We'll take a look at some of the FANG stocks when we get back. We got the NASDAQ 100 up 102 points right now. We got the S&Ps up 7 points. The Dow is negative 55. And Russell right now flat. Stay tuned, folks. We'll be right back to finish up the show. And I got an announcement for tomorrow's show, too. So don't go anywhere. Stay tuned. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of John Deere up here, up 3%. It looks like John Deere workers have approved a new 6-year contract with bonuses ending a 5-week-long strike. Some of the details in there. I appreciate our man EKS throwing this in the YouTube Tigers Den early. Talking about $8,500 signing bonus, 20% increase in wages over the lifetime of the contract, and 10% this year. 3% lump sum payments, some big numbers in there for the employees. They fought for it. They got it. It's up 3% as the strike looks to be over on John Deere. So tomorrow, it should be a fun day at TFNN. I've been thinking about doing it for a while. I got the opportunity. So you're going to have 2 Tom O'Briens coming on the program because I'm going to be doing the program with my son, Tommy O'Brien the 4th. He's going to be joining me. It should be a fun hour, folks. We'll see if I last the whole hour. I got him for the hour. He'll be next to me. We'll call it Fantastic Friday, and he's just over 9 months old now. So we're going to get him on the air, folks. We're going to get him there, get him for those stocks. We're going to teach him how to buy low and sell high. It should be a fun day, and it should be some volatility in the program, because as I'm sure you all know, 9 months old can't really prep too much for what's going to happen in that hour. So it'll be a fun one. Tune in. We'll try and get him on. We'll see how long we last. Sometimes he gets a little tired in the morning. He's up about 7 in the morning, has a bottle. Gotta love the morning naps, right? We love the morning naps. Gotta get the morning naps. We should all have a nice little morning nap. And we'll see. It should be a fun one, folks, tomorrow morning. I'm looking forward to it. It'll be fun no matter what. He'll be right next to me. We'll be doing the show for an hour. Gotta love it. All right. Checking back into some of the stocks, let's take a look at some of those FANG stocks. We got Google shares this morning up about 0.5%, pushing almost 3,000. We jump over to the King Dog Amazon, up another percent right now to 35.83. We jump over to Facebook shares. Facebook down 1% right now at 337. We jump over to Netflix. Netflix down about 0.9% so far this morning. All right, folks, thanks so much for tuning in. Stay tuned. We got our man Basil Chapman. He's coming up next. Then, of course, we have... got to pull it in. Our man Larry, he'll be live at 11 o'clock. Fast Market at 12. You heard it. Kevin Hincks, they're talking Workday, right? What else they're talking? They're talking Foot Locker. They're talking Palo Alto Networks. Should be an interesting show at 12. Our man Steve Rhodes live at 1 o'clock. Dave White with the Power Trading Hour live at 2. And Tom O'Brien, my dad, wraps it up from 3 till 4. Stay tuned, folks. We'll be right back. Have a great Thursday.